The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this Monday, the 14th of January, right here back in the cat seat, or whatever it's called, in my office. I really don't mind being on the road because with modern technology, for at least I must have been using the internet to do shows from overseas from way back in 2002 or 2003, sort of using my PC. So I thought it was very good, but I've been having problems with packets for quite a long time, and I thought it was my internet service. But I have to call them to see. Maybe it's they're the ones that aren't delivering the packets properly. So anyway, I managed to get through last week. Some frustration, but in the meantime, back at the ranch, this market is holding up pretty darn well. Look, Dow's down 97 at 23,900. Let me just go through. You know what? It's a really important thing for me to feel comfortable that the evidence that I'm looking at, that I consider evidence at least, in the marketplace is something that you can latch onto, maybe use for your own benefit. But most importantly, I need to be looking at it in such a way that it's structural, that is based on the Chapman wave methodology. So let me show you what I was looking at over the weekend. I use the MACD, the moving average convergence divergence technical tool, just set of moving averages, 26 and 12 and 9. Well, there's 26 in a shorter term. That becomes a 9-period differential after the 12-period moving average is basically recalculated to form a 9-period differential. That's the green line. And look how strong it is. This is the daily chart. Look at the weekly chart. It's just flat, nothing there to see. And the monthly charts are horrible. That's why I love to look at time frames. That's why ever since I've been here, since 2003, I believe it is, 2002 is when I started. My newsletter began in February or March of 2003, I'm sorry. I've discussed this in terms of time frames. I've looked at the 120-minute chart, like right in here. I look at the daily, I look at the weekly, I look at the monthly. I like to get that perspective. And you can get a high variety of looking at perspectives if you're looking at the short term. Remember, this is what I'm going to be teaching my webinar Wednesday week, all-day webinar. These webinars are really important as far as I'm concerned. I know that I have people that have emailed me for years and years and years saying, yep, we're looking at this, we're looking at that. It's really been a tremendous help. I'm not saying it's the panacea. I'm not saying it's the thing that can reduce everything to just 2 or 3 major calculations. No, it's a whole process. But in the end, it really is based on, look at this moving average. MACD crosses positive, crosses negative, comes back. It makes a pattern that I almost always, if you look at my work, this is where I put in that rectangle formation. Says there could be another M shape, another arch on the right. That's what you got to look for. Otherwise, it's going to deflect lower. Look at the way the histogram has gone quite positive. Oh, just went a little negative. So this is very important. Look at the way you've got an arch. Look at the way you've got the cups. Look at the moving averages here that have been giving really good clues. Look at this little doji candle. Look at the doji candle at the bottom. These are all fabulous tools that you can use. And when you get used to them, it's like a language. It's not like you're turning the page and say, oh my, what is theta? Or what is aleph? Or what is, whatever it is. You're looking at it sequentially. So let's look at it sequentially. Look, here we've got 2-minute chart. This is the RTY. This is the Russell 2000 2-minute, Russell 2000 5-minute, Russell 2000 10-minute made a peak after top. Look at that 6th highest peak that goes from the 1443 level, plummets down to the 1431s. I mean, these are now. Look at that blue line. Look at that 200-period moving average acting as a fulcrum. All right, let's get back to our nitty-gritties. The reason why I'm talking about this is not just that I have a webinar coming up Wednesday week, an all-day webinar, 3 hours in the morning, 9 o'clock till 12 o'clock. And then 3.5 hours in the 4.5 hours in the afternoon. No, 3.5 hours in the afternoon, 1 o'clock to 4:30. We're going to be discussing. We're going to practice in the morning. We're going to try to do them in the morning, and then really go for it in the afternoon session to show you how you identify good stocks, etc. All right, enough with that. Let's get on with the show. And the show says the Dow's down 94. Had a huge move up. Look at the MACD. Look at the stochastic, over 80%. In fact, it's at 96%. That is really bullish. I would not want to put it on any shorts right now until we conclude at least a peak D, and then we'll see what happens. There's only a peak C at 24,014. We need to go to 24,015 to start leg D. The pullbacks have been just one day at a time. This is actually the second day. We'll see if we can manage. I think by Tuesday we try to make a new recovery high. Wednesday at the latest, but I think it'll be by Tuesday. Nice action. And we took great profits on our option call between 40 and 50%, depends where you go, where you sold it. And nice. We hope to get back in on the long side very soon. And we're trying. We've got it in place. So we'll see if we can get it. All right, let's go through this. S&P right now. So the Dow at 23,908 has 24,050 to 24,090. Strong resistance based on my Chapman Wave automated technical tool resistance levels. Look at all those resistance levels right there. Even goes up to 24,185. It has to pounce and go right into the 24,250s on some really exuberant good news to make a difference at this point. But in the meantime, we should be holding in the 23,700s, 23,000. What's the low today? 23,765. I said 23,750 to 23,700 should be good support. All right, let's run these quickly, and then we've got a break coming up. So here we go. S&P now is down 12.67, way more than the Dow. Dow is down 89. It should be 120. So we're down 12 on the S&P, made a peak B. It's only at a B. It should still go to a C and a D. For pullbacks, we've only had green candles. I mean, this is incredible. This is good strength. The MACD is good. Stochastics at 97%. I'll talk about weekly charts in a little while. Let's just get through this. I want to show you the QQQ. Right now, the QQQ also made a peak C like the Dow. It's consolidated for 3 sessions now rather than just the 2 of the Dow. Today is the second session for the Dow. What we need to see in the QQQ trading 159.63, down $1.06. You need to see 161.53 for a new leg D. The MACD is strong. The stochastics at 95%. I love that. They're improving in the weekly charts, but not yet great. IWM right now is trading at 142.70, down 98 cents. It's been one of the strongest indexes. On the downside, this ETF was 27%, one of the weaker ones. On the upside, it's been leading the pack. You like in the first part of January to see the small caps moving up. It needs 144.00 starts leg D, and it's at 142.71. Let's just quickly look at gold as we're about to go to a break. If gold just having a high-level consolidation, up $1.50 at 12.91. Basil Chapman, Tiger Technicians Hour. I'll be right back after these important messages. Dow's down 8.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, so let's have a look at this right here. You remember what we were talking about? I drew in the arch formation, then I drew in the cup formation, and what I said was that within the context of looking at these moving averages, we are alternating between the arch and the cup. And now the RTY 2-minute chart just spiraled up to a leg C. And that's really the market. What we're looking at here, and the reason why I wanted to show this now, I can put an up arrow because there should be slightly higher highs. Okay, one of the reasons why I'm trying to mix in a whole bunch of the technicals at the same time is, look at this. There's a technique that I have developed over the years where I'm looking at the wave count, and when you get to the fourth highest peak D, other things can happen. Remember, this is my rule of thumb in the Chapman wave methodology. And if you look at gold, having walked the 14-period moving average and used the 19-period moving average as your first initial springboard, with the 14 being the cushion that it has to hold, look how it's done that since late December. So you get to D, and it goes 1, 2, 3, 4 candles to the downside. And then it holds on a closing basis the 14-period moving average and starts to rally in a cup formation. I didn't have a chance to draw this in because it all happened so quickly. And that cup formation takes out the previous high, around about the 1253 or something level like that, and it spirals up to 1269, 1270. But look at the MACD. The MACD never crossed negative. All of a sudden now you've got EFG. Now, if it wasn't Chapman Wave Instant Restart, I would have an alternate count E/A, F/B, and the next one goes G/C, but I never had that. I had a G, and I have to just let it play out. I'm not the market. I only do my very best to make this multitude, this plethora of a series of technical tools to be able to analyze it. That's all you can do. I mean, the market is the market. I'm not telling it where to go. Oh, I'd like to do that, but it doesn't work that way. It's the other way around. I've reread this book, absolutely fantastic book, The Wave it's called, by Susan Carey. Is it Susan Carey? And they're talking about these monster waves. This is right in the beginning with the 80-foot, 100-foot waves. It's the same thing. You're riding the wave. You can't tell the wave what to do. that kind of momentum. I mean, the wave does what the wave does. And you just try the best you can to manipulate, to be able to organize, to balance, to move forward, to lean back, to be able to constantly stay on board for the trade. And that's what we're doing here. So, so here I am looking at this rectangle formation, all right? Peak G. And it's still at a G. And can you believe that for 1, 2, 3, 4, 5, 6 today is the 6th session since that peak G high, recovery high of 1290, no, it was 1300.4 on the 4th of January. We haven't broken above, and we haven't broken below the 1278.1 low of the 4th. I always draw the rectangle in. Another technical tool you'll learn when you learn my methodology. Just grab whatever you can. The outer bars are really important. And look what we've done. We've got a declining line that it hit exactly today and then got repelled. Haven't yet drawn, here's the upper line. It hasn't even come close to that, which is at 1283. And it's stuck. And what is my rule of thumb? My rule of thumbs is that a rectangle formation can last a lot longer than your patience. And normally when it's at a high and it goes sideways for a while, it goes sideways as it creates, if the MACD goes negative just slightly, and the stochastic goes negative just slightly, in this case, the MACD just went negative 2 days ago, slightly negative, and the stochastic's gone from 80%, over 80%, well over 80%, to under 80% to 77%, and it's holding above the 9-period moving average. Very often when this finally resolves, it could go slightly higher, but the longer the rectangle remains in place, the longer it stays in the rectangle, and the quicker it'll break to the downside, and then that rectangle becomes resistance. Now, why do I talk about it? Because the monthly chart has improved a lot, but it's the weekly chart that is so close to the 1303.7 200-period exponential moving average, so we're going to have to watch that closely. Silver has a mind of its own, but in fact is up 0.004 at 15.66 in the same pattern right now. It did take out the candle of the 4th low, hasn't closed under it, but it's there. So, and the MACD hasn't crossed negative yet. Stochastic's gone to 78% and 80%, but it's holding really steady. High level consolidation as we look at it right now. Weekly chart has really improved technically. Monthly chart still looks horrible. And I should be polite. The monthly chart still looks horrible. 2.627 on the HG, the copper contract. It's at least attempting to allow the technicals to improve a little bit. It made a low on the 3rd of January, 2.543. It made a high about 4 days ago, 4 sessions ago, 2.6865. I think it's holding okay. Monthly chart is not good at all, and the weekly chart is, let's just say, that reminded me. Dave White is doing a webinar on Wednesday night. He uses an oscillator. He's going to talk about this. He's going to talk about many things, I'm sure, but he's going to talk a lot about his oscillator. He's had, maybe 18 months, 16, about 14 months, I think, or more of testing it at highs, at lows. It's done a fabulous job, really given some lovely, lovely trades. Great work, Dave. Congratulations. And at the same time, he's used it in a methodology that is mathematically derived, and that's really a lot better than visuals because you've got numbers that you can work on. I happen to love visuals, but I also respect greatly when you can do it mathematically, as I have in this particular instance here. When you're looking at, look at Citibank going right through 57.90, Chapman wave automated resistance, 60.34 is the next level of resistance, trading at 59.21 right now. So I'd like the mathematical part as well. All right, let's go to the TLT. The TLT is the Lehman 20-year Treasury bond fund pulling back. That's really giving some support to the market because money comes out of the safety of bonds and goes back into the riskier equities, let's just say, or the risk in equities. And that's what's happening now to a large extent. So that's why this pullback is moderate. I still think there could be another one tomorrow, maybe a little bit negative news. And then by Wednesday, I think we start to, with options expiration this week, I think we're going to try to make recovery highs for the next leg up in the market. And then we might have another pullback. So it is to see how this goes. Meantime, back at the ranch, Dow's now minus 58. S&P's down 971. I wanted to show you this. You see the way the TLT, the MACD's negative, stochastic is way down at 24%. It's under the 9-period moving average. It's green on the way up, red on the way down, and it's under the 14-period moving average. The weekly chart has a spectacular move to the upside under the 200-period moving average of 121.33. I think this together with the VIX index, I wonder what the VIX is doing now. It was up 2 before, it's only up 0.96. The VIX index is making the Chapman wave, Eiffel Tower, uppercase A, straight up, straight down pattern. 17.70 is going to be absolutely a big clue. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So I had a question about, let's see if I finished. Oh, I haven't finished crude oil. Let me just do crude oil, and then I'll do Microsoft because that was a question that came in. Crude oil right now is trading. I have no clue where it is, up or down. Or what. It's down 31 cents, 51.28. Made a peak C in the Chapman Wave Daily. Leg A, gray leg A in the weekly. I love that doji candle of the low of the week of the 24th of December, 42.36. But the MACD and stochastic need a lot of work. And that monthly chart, oh, that's just going to take, there's going to have to be a trigger for a move into the 55, 56.5 area to really change this as a characteristic of lower highs and lower lows. That has to change, and the only way you can get it is price movement. I don't care. Look, the technicals have been fantastic in the daily, and it has gone from 42 to the 52. That's 53 touched. So that's you've got yourself a, what is that? 22%. Yeah. So it goes from 42 to $10. Yeah, I'd say it's 22%. That's a good rally. So what I am looking at though, and what's really why do I keep thinking something's wrong with that? No, it's right. So what I am thinking here is that I believe very much like yields that crude oil is stuck in a range, and I think the range could be in the 54s and supporting the 40 to 51, so 47 to 46 area, and that's the same as the TNX. The 10-year yield could be in a range, running a little bit higher. It's at 27.06, 2.706. It could go to the 27.80, maybe even 28.20 area. And I think it holds the 25.54, maybe nicks it and goes 25.34. But I'm suspecting that what we're looking at here is that this is just trading in a range. Nothing serious is going on now, either in crude oil or in yields. I think I've covered everything I wanted. Now let's go to Microsoft. So Microsoft, this is going to be very interesting because Microsoft, years ago, I thought, oh man, Microsoft, all those Cisco's and everything else, those stocks were just, that was of an era, the era that went to 2000. 2000, that is the year 2000. And then they just died. I mean, 53.97. Microsoft goes from the single digits to 53.97 in 1999. I think that was December. Was that this in January or December? 51, 53. Yeah, December was the high. And January was a Chapman wave 2-bar reversal. And then it takes a little bit of a dive. It goes down to $14.87 in 2009 at the low. Okay, so it has a little bit of a rally. It has a little bit of a rally to, look at that huge cup formation. Let me just show you something. See this cup? Oh, I don't think I can because I lost it. I wonder if I can get a GC. Why do they do that? Companies keep taking over these indexes and then you lose. I wonder if GC.P was it? No, they've taken it away completely. Oh, no, I don't have all that work I did on the gold contract going back. Oh, I've lost it. It's gone. Going back to 1974 or something. Man, I hate that. All right, it's gone. All right, it made this beautiful cup formation going to the year 2000, 2001. And then gold broke out. And when a huge cup gets broken to the upside, it is massive. You can have, I'm doing visually, you can have that whole base of the bowl formation vertically. You could just move it up like this, go vertical. And that's what happens to these things. So look what happened to gold when it went from that low back in, now I'm trying to even remember if I can, 800 or 500, I can't even remember what the price was. And then it went screamed to the upside to the 2000 level back in September of 2011. Now it's trying to make another bull formation. I think it'll succeed, but it's going to take time. So now let's go to Microsoft, and that's really what my point was. Look at that bull formation from 53 to 14, back to the 53, breaks out in a Chapman wave cup and ladle, does a little bit of a retest at the 53.97 after it breaks out to the 58s, and then wham, it just takes off. And what does it do? It screams up to the high that was made, the all-time high, and that was an all-time high of 116.18 in October of this year. Dow also made its high in October. So it falls from 116 to the 94, 93, 98 area on the 24th. So that is 23 points. So there again, there's your 20%. So many stocks have done their 20% correction. Some have had a 50% correction. But I would say that a chunk of the work has been done. Now we're biding our time, waiting for some kind of signals to really notify us that the next phase has begun. It hasn't begun yet. And that's the reason why I want to be somewhat cautious. But we have been buying Our buys, I don't want to say our buys are looking fantastic. Our buys are up very nicely. And we're in a diverse portfolio. I'm not interested in just being single-minded here. I want us to be in a very diverse portfolio. So, and that's going to be important in this particular phase until we can get some real leadership back into the FANG stocks or the FAN-type stocks. So they've had a spectacular move off the low, some are up 20, 22%, but now they're going to have to do some digesting. All right, got that out the way. So Microsoft, I like. But, you know, drawing trend lines, so this is what we're going to do the Wednesday week in my all-day webinar. Yeah, it's so nice to have an all-day webinar. No pressure, no time constraints. Every question you have, I don't care what it is, where it is, how it is, I will answer it. There's no, I remember I took a course with my wife and I took this course once and we were there and what, I think my wife put her hand up and asked a question and this guy looked a little annoyed. And then later on, I asked a question and he actually got upset. And I'm saying to him, we had for the same, not the same actual course, but within the same program, other teachers, lecturers would embrace the question and then put the question into what they really wanted to do. So they put it into context, my context, and their context, and made a fantastic answer that satisfied everybody. But this other guy would say, oh, hold on, no, I hate that. That's complete wrong thinking. If you have a question, the question is now. I know when I have a question, it is now because I'm liable to have forgotten the question after a little while. So that's why it's important. We will answer the questions right away. So the question for me now is in Microsoft with the monthly chart, we've only just really begun halfway through January, but this is the first corrective month since the horrible action of December. And I'm looking at it and I'm saying, well, it's under the 9-period moving average, the green line in the monthly. It is above the 14-period, the black line in the monthly. Pretty good action considering what happened last month, but we've got 2 weeks to go. Anything can happen. The MACD did cross negative slightly, and the stochastic has gone to 77% under the requisite 80%, which is really what we like to see as strength. And the weekly chart, the MACD and stochastic have slumped horribly. They're going to take a while to recoup their strength. And the daily chart, very nice rally off the low, but it's, you know, so you go from 93s to the 105 level, 104 level, and now you're at 101. What happens next? I'll show you a couple of things when we get back. A few techniques that I'm going to be teaching in my webinar come Wednesday a week, 23rd. Go to the front page of TFNN, check it out. I think it should be a lovely course. Really looking forward to it. I'll be back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. No
matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're looking at Microsoft 101.91 down 89 cents. So here's a pattern that I look at. It's called the Chapman Wave Falling Axe. Basically, it's a declining, expanding cone. It's a wedge formation. And this is what I talk about in my Chapman Wave CD, introducing this a CD book, introducing the Chapman Wave methodology, falling axe pattern. It really is a series of lower highs and much lower lows, and eventually it tries to break out from the top. And here's another one right there. And when it does, it could actually give you a one-to-one to the upside. I prefer to see this at an upper end where it's making really new highs or up in recovery high area. So in this particular instance, it's fighting two patterns. It's fighting, oops, here's the, let me show you. There's the, did it make D? Oh, so close. Peak C1, C2 in the 2-minute chart of the RTH. Sorry to jump around like that. I just hit that chart by mistake. So look, here's the falling axe. But look at the way you've come down. I'm looking at this and I'm saying 80% of the stochastic, MACD is good, not great. I think that Microsoft is a stock to be considering, Jason. I would prefer, yes, it is a peak B, and I think it's actually going to go to a C. I have a feeling this one's going to make more the arch formation. I'm putting this in the tech sector, the ones that were the older ones that had spectacular runs to join the cadre of high techs or tech stocks that is spectacular 2018 into the middle of the year or the third part of the year and then pull back. But I think it needs time. So until it can go, and you see what I did? I put the Chapman Wave, this is called the inside track repellent zone, so that it hit the pink red line, keeps failing. I think it's going to get inside there. Does it go to leg C above 104.88? If it does that, it needs to do that within the next 3 sessions. It really does. It needs speed. Otherwise, it's going to make another arch formation. So I do like it as a portfolio, let's see, as part of a portfolio. But I'm suspecting that if you buy it now, it might have limited upside. I think it needs more time to consolidate. But I love the fact that it's one of the stocks that made its high and held really well technically so far on the monthly chart. So this is what I'm going to say. If you're looking at, I know sometimes you buy calls. If you're looking at a call at 101, I try to buy the 102.50s. I wouldn't go to the 105s. I go to the 102.50s. You're going to pay up for it, but that's the best way to play it. And I wouldn't go January this week. I try to go a little bit further out. It means you're going to pay quite a bit more. I'd go to February because I think it's the 3rd week of February that not this week. It's the next week, next week, whatever it is. The next week is the week that I'm thinking that there's a really good chance in this particular instance that Microsoft starts to move a high and it goes into this long-legged wick of 106.88. I don't know if it'll go to 106, but into this area right here. That's that candle of the December what was that? December the 19th. And that's going to be the big test. Can it close above that? And that's going to be tough. So I do like it, but I really like it looking out into maybe the second quarter. That's where I think it'll come back again. So I'm talking about longer term. Short term, I think it's going to hold support in the 100 to 99s, but I don't want to break 99. That'll put action. Question I had was, could I look at RWM? I've never looked at RWM. This is the ProShares Trust Short. Oh, the Russell 2000. Okay. So this is just plain short. This is not. This is 1-to-1, I believe. So have a look at this. You see the pullback looks a little bit like the VIX index. You see this pullback? It has at 43.61. It has resistance at 44.90. And I've got a target, the 41.61, 200 period exponential moving average in the weekly. I think right in the middle. And I'm giving you a number, 42.58. I think that's the area to hold. I think it's going to try to touch that within a week. And I think if it breaks that, then 41.61 is the 200 period moving average. I wouldn't be surprised if in this move we do get a test of that. And then you can maybe start saying, okay, now we're a little toppy in the IWM. Are we starting to look at a rally in the inverse? Okay, next question I had was, where did it go? Oh, it was a statement. Could I look at the FTSE? So dollar sign UK DOW. Remember, this is the index that I get. It's the incorrect symbol. It's GB, Great Britain, DOW. This is the Dow UK stock index. It looks exactly the same, just different prices. Look at that monthly chart. Look at that arch formation. Look at the steepness and the speed with which we've come down. Look at the MACD and the stochastic, very negative. Stochastic is trying to form some kind of a basing area in the monthly. The weekly chart has just had a nice bounce, but the price is really, it hit the 200 period moving average of 313. Since it made us, I'll give you dates because that's more important. The date of the 27th was the low. Remember, it follows us, so it was a day late after that massive 26th of December turnaround in the market, 700 something points down. So yeah, we got 291.88 was the low on the 27th. Whatever the low on the 27th was, there was a tremendous move from 291s to the 314 area. 313 area, let's call it, of 2 days ago. And that's a big percentage move on the upside. Now I think there's some digestion. I think it's going to try to attack the weekly charts, 313 to 311, moving average resistance levels over the next week. So I see some upside, and then I think we've got to watch out because that could be the next step to the downside. Or if everything holds, we could start another move to the upside. That'll be a surprise if this market continues to climb a wall of worry. And let's see now, is there a wall of worry? No, there's absolutely no wall of worry. There is a wall. There is Brexit. There is tariffs. There are taxes. There is the political agenda. I would say there's no wall. There are walls all over the show. And if this market climbs the walls of absolute, I don't think I recall seeing such daily, hourly, and minute by minute railing against the president since the Nixon days and Vietnam. It wasn't the Watergate, it was the Vietnam. And then it was Watergate. That was the cherry on top. And of course, that was just, I mean, Nixon was an easy guy to hate. There's no question about it. I mean, he just looked like a guy. But actually, when you look back, he played the piano. I like that. He went to China. He went to China because he wanted to get the hell out of America because he couldn't stand it here anymore. He needed to go there. And you know what? When we look back, that was a momentous occasion. Who knew? So things happen in history that when you look back, you say, who knew? So I'm just hoping this is a who knew situation because I don't like this. I don't see how anybody can look. If you've ever been hounded by anything, a toothache, the IRS, I can't even think of these. It just sits in your head, or a bad trade. You got a trade that's down 40%, and now it's sitting and wagging its finger. Every time you make a profit, you say, oh man, I've still got this sucker sitting there just killing me. It's very hard. How do you run a presidency when you've got this over your head? Man, This is not good. All right, Dow's up, down 70, S&P's down 11. I'll be right back. That'll catch it.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So we're back. So we're looking at the RTH, the Russell 2000. Russell 2000. And we're looking at, what did I say in the chart wave? We're always looking for Ds, and there it is. You go from a peak C, and you've gone to your D, double topping right here, watching it closely, but it did get to the D. But this is important in the chart wave methodology. Remember I was saying you're always looking for Ds where other things can happen. Well, the 10-minute chart has gone to a peak C above that peak F that was made at 1443.60 at, what was it, 10:20 this morning Eastern time. And then it breaks and it goes to a lower low, meaning this is a brand new buy mode in the 10-minute chart. And in leg C, it says it should go to a D. And the D should be somewhere in the 1444 to 1445 area or higher. And that's going to be important. So this is the way, it's so nice to know that you've got a technique that says, aha, we've gone from the 2-minute chart to the peak C in the 5-minute chart, which suggests that even if there's a pullback, there should be a higher high to come, because even the 10-minute chart is expecting a leg D. So any move above 1444.20 in the 5-minute chart starts leg D. If it does it very soon, it'll extend leg C and be even more positive and say that there still has to be a D in the 10-minute chart. Hope that made some sense. For those of you trading, you know exactly what I'm talking about. Here's the E-mini. It's lagging. Isn't that interesting? It's lagging somewhat. and it's just kind of stuck in a range, but it needs to get to the 25.90 area to really break out. So let me do a couple of things here. Remind you, I've got my webinar coming up a week from Wednesday. It is really comprehensive. It's about the Chapman Wave methodology, the cups, the arches, how you use the moving averages, how you can do, look at this left side, right side price time match that I did just a little earlier. Here's the one on the Great Britain, on the United Kingdom Stock Index daily. It's got a long way to go, but the next resistance will be in that line coming up tomorrow. And that's the way you can do these things. And there's tremendous support of these moving averages. Don't forget, you've got a webinar coming up on Wednesday night by Dave White. Should be fabulous. One on his oscillator. Just really good work. You've got Dave, you've got Steve Rose coming up right now. Also does fantastic work. Have a great day. Stay tuned for Steve, Dave, and Tom coming on at 3 o'clock. I'll be back tomorrow. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.